What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for AMD stock. This one I started buying a couple weeks ago. As you can see here, I have about 18 shares at an average cost of 118. But since they reported earnings yesterday and the earnings were just mediocre, the stock fell 10% last night going into this morning. And now the stock is slowly starting to recover. So if we go down here, we can see for EPS, they had a very slight beat, $1.09 versus $1.08. And then I think revenue was pretty similar. It wasn't much different. It was just they just hit the numbers that analysts were expecting. So there's a couple different things here. Like for one, the data center revenue grew 94% for the full year to now $12.5 billion. That's good. Keep in mind, this is the second largest producer for gaming after Nvidia, which is not a bad place to be. But they gave decent guidance, and as you can see, there's some analysts like this one raising their targets to, or this one slashed their target from 130 to 180, and that probably contributed to why the stock was falling last night. But I think this is a great opportunity. If we look at the price to sales history here, we can see that right now, as of 2 days ago, it was trading at 7.6 times sales, which historically is kind of near the average, but definitely on the probably going closer to the lower side, especially after falling 10% last night. It's on the cheaper side of things right now. So then the other thing I liked here is on Qualtrim. Now we have access to a lot more things. We have access to the PE going into trailing 12 months, the next 12 months, and then 2026. So as you can see, we're paying 22 times for this year's 2025's earnings, and then we're paying 16 times for 2026. So the growth is definitely there. There is definitely growth expected for this company. And although they've had a couple years here where the numbers have been kind of stagnant, I think that's going to change for these next couple of years. And so analysts have them growing revenue at roughly 23% this year, 21% next year, EPS going from 3.3 to 4.8 and then 6.4. So the numbers are looking strong, right? And that's what makes me think this stock is going to have a very good run in 2025. So let's see, we have roughly a year ago, this stock went as high as $211, and now we're sitting at almost half of that, right? So I think this is a great opportunity. If we look at the past for, let's say, net income, for example, again, 2023 was a rough year for them, but the last year and a half, they have been improving with their numbers. And so that's a good sign. The cash to debt ratio is a whole lot better now with over 5 billion in cash and only a half a billion in debt. So that's good to see they're improving that. Shares outstanding have been flat, which is also very nice. And then let's pull up yearly return on capital because that's always an important number that I like to see here. And let's see, it looks like it peaked in 2021 and it's been not very good these last couple years. Profit margins of only 6%, again, not very good, but they're in second place after Nvidia, and the price to earnings is just so cheap right now that I'm willing to take this risk because I don't see the stock falling too much more than what it's at right now. I mean, look where it's hit this price several times in the past, going back even to 2021, and then if we go back to this price to sales chart, it was cheaper in 2022, but remember, these were extreme times. This was like recessionary times, right? And the whole market was crashing huge. We're not in that situation yet, at least right now. So for it to be trading at below, let's say 7 times, 6 times sales, that's really cheap, right? And so that's why I'm not too concerned with this valuation. I mean, 22 times for this year's earnings is not a lot, especially for a chip company like this that's going to be growing over 20%. I mean, you see some of these other tech companies that are only growing 20, 25%, but the ratios, I mean, even like Palantir, for example. Palantir is an extreme example, but there's a lot of tech companies where they're trading at insane valuations of, 40 times, 60 times earnings. And it's like, it just seems ridiculous compared to a company like this that's growing at similar rates. And it's not like they have some horrible business model or something. It's not like they're in some horrible dying industry. And the P ratio is only 22. So I'm happy to be a buyer at that price, and I'm willing to take on that risk. And so that is my analysis for AMD. Let me know what you guys think down below, and if there's any other stocks you want me to do analysis on. Otherwise, I will see you in the next video.